A single click on a Google ad cost a crypto trader his entire savings as a fake Uniswap site drained his wallet. The scam mimicked Uniswap's interface, tricking users into approving malicious transactions. Security experts warn this ad-driven phishing method continues to target DeFi users, with tools like Angelferno exploiting lookalike domains. Nearly $4 billion has flowed out of Bitcoin ETFs over the past 5 weeks, raising questions about institutional sentiment. Despite the outflows, Bitcoin's price edged up 1.4% to $67,800, while experts debate if this signals a market reset or ongoing weakness. Analysts remain divided on whether these moves reflect a temporary recalibration or deeper structural concerns for crypto markets. A massive $2.5 billion in Bitcoin and Ethereum options expires today. But it's the huge $40,000 Bitcoin put that's raising eyebrows. Despite most traders betting on upside, this deep downside hedge signals ongoing crash fears and could spark fresh volatility as the month ends. The market's next move hinges on whether prices drift toward max pain or if hidden risk protection triggers new turbulence. Tether's USDT just saw its biggest monthly supply drop since the FTX collapse, falling by $1.5 billion in February. While USDT shrank to $183.7 billion, the overall stablecoin market grew, with USDC rising nearly 5% to $75.7 billion. This shift is driven by tighter regulations, a crypto market sell-off, and new competitors like $1 signaling a changing stablecoin landscape. Uniswap is set to reshape DeFi economics with a proposal to activate protocol fees across 8 additional blockchains and all V3 pools. If approved, revenue from Layer 2 networks will be routed back to Ethereum for automated UNI token burns, tightening supply and linking activity to token value. This marks the first major test of the unification governance framework, aiming to streamline fee adjustments and unify cross-chain operations. Solana's price has slipped below $82 as liquidation waves force leveraged traders out, amplifying selling pressure. Funding rates have turned negative, signaling short sellers' dominance. Key support levels at $75 and $90 remain crucial for market direction. A hacker returned 320 Bitcoin, worth over $21 million, to South Korean authorities after failed attempts to cash out. Prosecutors froze all exit routes, forcing the funds back into official wallets. The Bitcoin is now secured at Upbit, but investigations continue to identify the culprit. A surge in DNS hijacking attacks is putting DeFi users at risk, with OpenEden's domains compromised and wallets exposed to phishing. The platform warns users not to connect wallets to OpenEden.com or portal.openeden.com, as assets may be drained. Reserve assets remain secure via Chainlink proof of reserve, but only users avoiding the fake sites are safe. CME Group is set to break tradition by launching 24/7 crypto futures and options trading starting May 29th, pending regulatory approval. This move gives institutional investors round-the-clock access to risk management tools, aligning with the non-stop nature of digital asset markets. With average daily volume up 46% year-on-year, CME's expansion reflects growing demand for regulated crypto derivatives and may push other exchanges to follow suit. Traditional finance giants and crypto executives gathered at Mar-a-Lago for a Trump family-hosted crypto forum, marking a rare convergence of Wall Street and digital asset leaders. Notable attendees included Coinbase CEO Brian Armstrong, Binance co-founder Changpeng Zhao, and Goldman Sachs CEO David Solomon, who revealed he now owns a small amount of Bitcoin. World Liberty announced plans to tokenize loan revenue interests in a Trump-branded Maldives resort, offering fixed yield and profit exposure to accredited U.S. investors. As Bitcoin tumbles nearly 50% from its October peak, Senator Elizabeth Warren urges the Treasury and Federal Reserve to clarify they will not use taxpayer funds to rescue crypto firms or investors. Warren emphasizes the lack of legal authority for government intervention, warning that bailouts would unfairly benefit wealthy insiders and crypto billionaires. The debate highlights rising scrutiny on digital assets and the push for clear consumer protections in the crypto market. $47.5 billion in stablecoins now sits on Binance, accounting for 65% of all centralized exchange reserves. This massive concentration signals that crypto capital is consolidating on one platform, with USDT and USDC flows slowing and market liquidity becoming more centralized. Analysts note that while outflows have eased, Bitcoin's downside risk remains, and true recovery may need renewed risk appetite.